Hello, everyone, and welcome to Econoday Unplugged. It's Tuesday, 29th of May, 2018. I'm Jeremy Hawkins here in London, and with me, as usual, from across the pond is Mark Pender, no doubt making the most of what I understand to be World Biscuit Day. Now, it's an important week for European economic data, but over here, certainly it's a political risk in the Eurozone that's dominating investor sentiment. But perhaps before we get on to that, since it is supposed to be about economics, we'll go across to Mark, because I noticed that it's non-farm payroll day on Friday, so I'm sure you've got lots to talk about.
Well, I'm updating the numbers right now from our forecasters. They're coming in still, and the number looks to be very strong. There's a wide range, though, for non-farm payrolls. The Econoday consensus right now is at 190,000. That would be up from 164, which was probably a little bit low. But these are very, very healthy, very sizable gains. But the range is 155 to 220, and the 155 is still very good. Now the 220. You'd have the overheating issues again. The unemployment rate is expected to stay at 3.9. Now it fell, don't forget, and there is some expectation for a continued fall with the low being at 3.8%. But there's also expectations that it might inch back up to 4%. Manufacturing is expected to do very well with the 18,000 gain. We're getting all sorts of reports out of manufacturing of unusual strength in May, so we'll see. And that'll be a very interesting thing to watch, by the way, because the manufacturing data, there's so much of it, and it is going through the roof. But it's not really going to equate much, at least the forecasters don't think so, to any inflation pressures. Average hourly earnings are seen only rising 0.2% on the month for a 1/10 gain on the year-on-year rate to 2.7%, which is going in the upward direction, but not dramatically. These numbers will be the first inflation indications that we're going to get on the month of May. So it looks to be a very solid report, and really it seems to be unlimited depth of capacity over here, no matter how strong the readings get, no matter how long delivery delays are, no matter how much input prices are going up. And now we're getting all sorts of anecdotal reports of gains in selling prices. Now, this is actual inflation. And some of that's coming out of this is passed through on tariffs. Certainly, we saw that in the durable goods report last week, where primary metals were very, very strong. So we're getting, I think, definitely for a traditional, prudent policymaker, these are signs of unsustainable risks, indications of the possible risk of unsustainable growth, overheating. And just before that, just to finish up real quick, I want to talk about Italy personally. But anyway, we also have personal income and spending data out on Thursday. That's the day before. Today's Tuesday, May 29th. This will be the day before the employment report, and this will, as the employment report will offer us the first inflation indication on May, which is wages. The personal income and outlays report will offer the definitive and final result of inflation indications on April. And the Econoday consensus for the core PCE index is really only 0.1%, which is very soft, and again belies all the strength in the economy and the lack of capacity, available capacity. With the core year-on-year core seen going down a tenth to 1.8%, and that's going in the wrong direction. So it seems to be more of the same, just a real puzzle that's been going on for the last couple of years here, when the unemployment rate started to fall from the 5% right down to 4%, and yet there's been very, very little repeated, sustainable, or noticeable inflation pressures. And how long this can go on is anybody's guess. And now, speaking of anybody's guess, tell us about Italy.
Okay, well, talking of guesses, I have to ask you first, after your preamble there. Fed hikes this year, how many? in light of everything you've just been talking about?
The expectations are
your
okay.
expectations.
I'm on the high side. I think we'll see 3. We'll I think certainly have 1 in June, and this. Really, they have to. Policymakers have to have confidence in the basic laws of supply and demand. And there is what is the hurry to accelerate this economy when there's many jobs openings as there are people who are looking for jobs, and we've never seen that before. So there doesn't seem to be, to me, any big hurry on increasing the rate of growth. And we're also getting fiscal stimulus. We're getting higher spending, and all these things are very stimulative. And there's been no precedent for anything quite like this. You do the Keynesian counter-cyclical stuff when you're in a slump, not when you're at the top of the top of your game. So that's what I think, and I think that could be an obstacle for the financial markets, higher rates, and also don't forget, the acceleration of the Fed balance sheet. We'll start feeling this a little bit this year now. They're out there; they're not buying as many bonds, and we're seeing interest rates creep up a little bit. So it's a very interesting thing, and I think time, and I think that there is a risk for, I think, certainly the stock market, and I don't see the possibility really of another 25% year like we had last year. And so I guess I'm a little bit of a bear, but that also gets me to the consumer confidence report that came out this morning, and it was really very strong, and the number of bulls shot up. And the number of bears came back down, so I could end up being completely wrong, but that's not how I should have concluded it. But in any case, that's my view.
Okay, well, I would say honesty is the best policy in this game. Okay, talking of honesty, it's not something we always associate with Italian politics. Let's move on to the strange field of play that we have out there at the moment. So it's become distinctly important as far as European investors and financial markets in Europe are concerned. If folks remember, last week we talked about the country becoming the first founding EU state to have a populist anti-establishment government and how that was hurting the euro. Well, that government didn't actually last very long, as the president, who has a veto in such matters, decided to rule against the new administration's choice of Paolo Savona, who's an arch Eurosceptic, as the new finance minister. As a result, the then supposed new prime minister in waiting, Giuseppe Conte, decided to refuse to accept the position. And so now we have a caretaker prime minister appointed by the president in the shape of a former IMF director and indeed a proponent of austerity policies in the shape of Carlo Cottarelli. Now, he'll have to try to piece together a new government, and quite clearly he's going to struggle because the supposed incoming administration, which was the Five Star and the Northern League, which was supposed to be forming this anti-establishment government, they have a majority in Parliament. So to all intents and purposes, it now seems that we're going to be in a short-lived technocratic government, and we'll have yet another set of elections later on this year. Now, why is that important? Well, it's particularly important this time because of a decision by the president to prevent this new finance minister from taking over his job. He is perceived by the president as being effectively too anti-Euro. Now, that means then that when we do get this next election, people are already starting to take the view that this is going to be an election on whether or not Italy wants to remain part of the Euro. If we were to see, which for the investor viewpoint is the big risk, that the likes of Five Star and the Northern League, who say were supposed to be forming the new coalition, if they were to see an increased share of the vote come the next election, that could be taken as a mandate to either take Italy completely out of the euro altogether, or certainly as a mandate to totally flout and disregard any kind of EU rules regarding fiscal policy and the like. So this is now becoming extremely important. It's a already had, as we talked last week, a sizable negative impact on the euro. It's continued to hit the euro over the course of the last few days. And more importantly, we're also starting to see some contagion effects in the other EU periphery countries. So Portuguese bond yields, as I speak, they're up around about 11 basis points today. Greek bond yields are up about 34 basis points. Spanish yields are up about 7 basis points as well. Now, BTB deals, so Italian bonds, they're yielding now about 31 basis points more than they were first thing this morning. And that's 122 basis points higher than a month ago. So there's now starting to see, real pressure coming through on some of these EMU peripheral currencies. Now, if that weren't bad enough, just to really rub the salt into the wound, we're also now facing a no confidence vote in the Spanish Prime Minister on Friday. Now, the outcome of that is still a bit uncertain at this stage, but there's certainly a possibility at least that he could lose that. And if we were to get the Spanish government falling on top of the complete political chaos that we have in Italy at the moment, then this downside to the euro really could open up significantly further. We'll certainly see spreads widening further, equity markets being hit in Europe, and it's going to leave a right raw mess, as they say.
Well, what's interesting is when you were talking about the individual bonds, these countries, and they're all denominated by the euro.
That's right.
And if, however, we start seeing a break apart of the euro, they'll be issuing. The Italians will have to issue, I guess, and they'll go back to the lira. And in theory, then, if the whole thing unravels, we'll have the Deutschmark back. And for the periphery countries, you would think that even the risk of such a thing would be inflationary. They would be able to use the bond market to compensate for their deficit spending. So is this an inflationary question that we're facing here?
If it were to come about, then certainly what you would see would be a massive move going into the core countries. So in particular, you'd see a huge buying spree of German bunds. And indeed, just in terms of the way the bunds been trading today, been talking about high yields coming out the likes of Italy and Spain and Greece and Portugal. Well, the bund yield today is down 7 basis points. And that's simply a reflection of this flight to safety within the Eurozone, out of the more vulnerable countries into those seem safer. And indeed, that can also be applied through the currency market as well. I mean, clearly, we're in a strong dollar environment at the moment, as we touched upon last week. But we've seen the euro falling significantly today and over the last few years against the Swiss franc. Of course, the Swiss franc within Europe is regarded as being the principal safe haven currency. So there's some real nerves surrounding all this now. But I've got to be said, having talked up, this state of chaos in Italy, it's got to be said that, the current spreads we're seeing and movements in financial markets is nothing like of the magnitude we saw going back to the big financial crisis. There's a long way before we get that. But it is, I think, important investors to realise that when this Italian election comes up, probably later on this year, unless something's happened in the interim, it could be a major sticking point as far as, what's going to happen to the euro in the future. And if we were... Yeah, sorry.
Well, if this isn't the first time we've seen this in Europe, of course, we had Greece before this, and then when the peripheries, the spreads jumped there, probably greater than now, certainly. So it's always these, I just saw Soros calling it an existentialist crisis for the euro, but they've had these from day one. And I have a question: is it to the point where people are asking, if you own an Italian bond and then they go back to the lira, what, you're supposed to be paid in euros, right? Are they going to convert it to euros and pay you that way? Or are these questions it?
If it's denominated in euros, then it should be in euros, and it would have to be at some point swapped potentially into the Italian lira, or whatever it may be that that they finally end up with. But so that is very much a long way down the road. But I think it is worth bearing in mind. You talked about, say, the Greek crisis we had, and there's, say, a few years ago now, but was considerable speculation that they may be forced to pull out of the euro. Well, the reason they didn't, of course, was because they introduced all these heavy-duty fiscal austerity programs, under the watchful eye of the ECB and the IMF. Now, the current Italian government, of course, at least one that's expected to win next time round, is completely anti that. So it's very hard to see how they could get any kind of bailout coming from the international bodies unless they're prepared to stick to their rules. So it's balling up quite nicely at the moment. It is still very early days, and something may happen that causes it or to the ripples in the pond to flatten out. But for the time being, at most, it's not a healthy environment as far as Europe's concerned for the international investor at the moment, which ultimately, I guess, has got to be further good news for the dollar.
Right, and probably it'll keep down U.S. interest rates. It'll slow the rise.
May well do. A stronger dollar equals lower US inflation, so it presumably could at least help to slow down the rate at which the Fed will want to tighten. So, a lot of eyes on the currency market. Well, okay, I guess we've been prattling on probably for long enough now. I should just quickly mention in terms of economics, since that's what we're really supposed to be here for, it is an important week for the Eurozone. Especially we'll get the flash inflation figures for the Eurozone for May. They're due out on Thursday. They are expected to see a sizable increase, but that's really just due to base effects. The core rate, although it'll probably move a bit higher as well, that's still really just trending sideways. So keep an eye on that one, because again, if we were to see a particularly weak core inflation number, that's just going to add to the euro's worries, because it'll make it even harder for the ECB to put interest rates or end quantitative easing, even should it want to. Okay, so I think that probably is myself and Mark done for this week. So on behalf of us and the rest of the Economy team, thanks as always for listening. Happy trading, and we look forward to doing it again next week. Bye for now.